So Delivery Hero is in a very fast growing um, area of the economy, which is food delivery. And, food delivery 10 years ago, I was like, man, this is crazy, but it's not so crazy anymore in my mind. And here's why is once you look at, owning a car, driving yourself to and from to pick up some food and so forth, and you look at the time, I find myself ordering from food apps quite often. And it's not necessarily because of my fuel cost, but let's say I'm working, I'm really busy throughout the day. Just the 15 minutes to drive to and the 10, 15 minutes to drive back from a place. And if I were to sit there and eat there, it may maybe be another 15 minutes. Maybe it's a 30 to 45-minute time savings. The $5 delivery fee is pretty reasonable once I look at it that way. So I've actually become a bigger customer. And if I have a 20-year-old son, I mean, the guy, I think if you asked him to cook let's say toast, just to toast some bread, he wouldn't be able to do it. But if you wanted to order whatever kind of food he wanted, he'd be like, DoorDash, boom, what do you want? When do you want it? And of course, his hours of operation are very different than mine. I sleep during the night. He's nocturnal. He stays up all night. All his friends stay up all night. We get food delivered to our house at 2 a.m, which is kind of nuts in my mind. But back to this company this is all normal now. So to a 56-year-old guy that 10 years ago was like, this is nuts. Now it's like, this is totally normal. And I think to the next generation, the younger people, this is probably like, hey, this is what it's all about. Who wants to go sit at a restaurant? I'd rather get the food delivered to my house. I could stay on my computer, continue to work, and so forth. This one here, Delivery Hero, operates around the world, which is interesting. It looks like they're providing the platform in the continent of Africa, Latin America, and Europe, which is interesting. I like the global diversification. I'm an investor in Uber. I made money on DoorDash. I sold my DoorDash stock. I may have sold DoorDash a little early because DoorDash has just been killing it. I made good money on it. I sold it, concentrated my investment in Uber, and DoorDash continues to flourish. Good for them. This company we're going to look at this in euros, which is almost 1-to-1 to the dollar. And this company's revenue is higher than the market cap. That is interesting. They're losing money, so we don't have a PE. Let's take a look at their financials. I'd like to look at their gross margins and see when are they going to get profitable. All right, so if we look at their financials, I like the growth. As you get larger, the percentage growth rate, as you would expect, gets harder and gets smaller. Because when you were a $1 billion company, yeah, we grew 86%. Woohoo, 2.4 billion. Okay, great. But once you get up to 11 billion, you're like, okay, growing is a little harder. So I'm still growing more than $1 billion of revenue a year, but the percentage rate goes down. This is totally normal in my mind. So this is good. This is very good. I also like that they were small, bigger, and now they're 11 billion euro per year. Excellent work. Excellent work. Now the margins are not awesome. We're going to compare these guys to DoorDash and see how they stack rank. DoorDash is doing great. And when we look at DoorDash, they're growing nicely. They're about the same size of what we're looking at in DLHR. Now, a big difference is DLHR is 9 billion. DoorDash is 72 billion in market cap. Way more expensive. Okay, maybe there's an opportunity in that company. When we look at gross margin, you see the gross margins are better with DoorDash. It's almost 50%. See that there, Tomas? So DoorDash is just more profitable for some reason. Okay. It's still very reasonable because the valuation of this company is far smaller than DoorDash. It's like DoorDash is 8 times more expensive as a company if I bought the whole company, yet the revenue is about the same. This one's actually a little bit bigger than DoorDash. Okay, so they're making gross profit. Once we look at, this is how much just running the platform, paying the people to run the platform, and having all that core cost is generating a $3.1 billion gross profit in euros. Their selling and administrative expense is a little bit high. It's higher than the gross profit. Okay. And then interest expenses there. So they're losing money, not a ton of money, but I think this number needs to be controlled. You see how we're going from 950, 1.35, all the way to 3.67 billion euro. It's like, how can they start controlling this number? That'd be a question that I'd have, because that's what's causing them to lose money. Okay. Go ahead, Tomas.
Is debt included there?
Not That is down here, interest expense,
Okay.
and that's not too bad. That's okay. Now, I'm okay with the company not making money just yet. Let's look at their cash flow, because cash flow is going to tell us if these guys are in trouble in some way. Now they're generating positive operating cash flow, free cash, so 102 billion. That's not very good. And in prior years, it was negative. That's not good at all. Now, when we look at, so operating cash flow is there, capex is there. Okay. Now DoorDash is going to impress us with their cash flow. So look at this cash flow. They were not making cash flow, and then they started making cash flow, and then boom, $2 billion of cash flow, which is very good, but does not substantiate a valuation of, man, my internet's really slow today. So that $2 billion of cash flow for DoorDash, I can't get to 72 billion, which is why I sold my DoorDash stock. I sold it at like a 50% gain and just moved on, but the stock's just been flourishing. So the joke's on me. This one here, there's question marks. Why aren't they making so much more cash flow? Okay, they're not in a business where they're like materials, which we're going to talk about next. You have to go find an area where you can mine, excavate, and draw out material. You need to get that material to market and then distribute it. There's a lot of expense in that. That's not this business. This business is about creating platforms, and then people, call them contractors, gig economy workers. They go on your platform, they deliver food for people, and you make money as almost like a piece of that service that was provided by somebody else who's not an employee. It should be more profitable, and they should be able to keep more cash, because it's not, their business is not inherently capital intensive. So this company does not create enough cash for me to be an investor. The second trouble, the other question mark that I have is, this number is too high. Like, why are you spending so much on selling, general, and administrative expense? This is kind of like the back office of the business. This is not to provide a delivered experience for a customer. This is administrative, salaried people. You know, why has it grown so much? Right. So go ahead.
Where can we see about acquisitions?
Competition.
No, where they acquire a new company, because as far as I understand, they are a holding that acquires different apps, delivery apps. But can we see how much do they spend on that?
I think you'd have to study their investor page and then track when they acquired
All right,
businesses and
all
how
right.
much.
All
So
right.
if you go to their investor relations, it'd tell you that. Just this business is not going to get my capital. Their cash flow needs to improve. Their expenses, their general expenses, need to go down, and their debt. Let's see where the debt's at. So EBITDA. See, they have negative EBITDA. It's not good. They have cash of 1.76 billion euro, and they have debt of 5.59 euros. So they have 3.84. That's not a lot of debt for a company that's 11 billion euro. That's not a lot of debt. Not worried about debt. I am worried about the other pieces. It's like, a business like DoorDash. The reason why investors are really excited and have said, "Hey, we want to be owners in DoorDash," 73%, is because they're proving their ability to generate cash, $2 billion, and it's not a really old business. Now, if they continue to grow like they've been growing, you look at their top line revenue. Look at that growth, 24% on a $10 billion number. That's excellent. So if they continue to execute on their business, DoorDash is going to be a popular stock. I'm glad I sold it. The market's happy about the stock. But that's what I'm looking for. I concentrated my investment. Then the next one I'm looking at, I think, was an N. Kiter suggestion, was Instacart, which is Maple Bear. That's the worst
Maple
name.
Bear. Yes.
That's the worst name they can name a company. But this company is also flourishing, right? And you look at $10 billion in, man, isn't that funny? All three companies we've looked at are around 10 billion. This one is, I'm sorry, in revenue. So this is 10 billion, 10 billion, and
10 billion soon.
This one's 3 billion. Okay, I was looking at the wrong number.
Sorry.
So this is the market cap for Maple Bear is 10 billion, much smaller. Look at this PE for a growth company, 27, forward PE 27. And when we look at their free cash flow and so forth, the revenue growth is good. It's okay. It's not as good as DoorDash. They are smaller than DoorDash, so they got to start growing. But when we look at their cash flow, so free cash flow 700 million, right? And you're getting the company for 3 billion. If I were to take 700 million and it's a growth company, it's in the right segment that I like, I'd be multiplying that times probably about 30. That'd get me to 20 billion. So I'm happy to buy Maple Bear because I think it's worth twice as much. And these businesses are similar. They're in this new economy and stand to really be important. This one just doesn't look as good as DoorDash, Maple Bear, and then of course Uber is much bigger. It's kind of in the same business, but it's also diversified into ride sharing, robo-taxi. So that's where I stand on that one.
All right, I will try to look into this company a little bit more because maybe there's potential, and if I find something, I'm going to show you. But
Good, yeah.
if it's not, I will stay quiet.
Now, the things that I wanted to say is you're thinking down the right road. This is new industry, higher growth. Just keep looking. Kind of like when I was looking at real estate. I'm not going to take the first deal that comes around. I'm going to do all my homework and say, this is a nice property, but it's too expensive. And I'm going to pass. This is an interesting stock, interesting company, but if I compare it to other businesses, it's not as good. So I'm going to pick the best one. But the thing that continue to do is keep looking at these new industries that you understand. They're going to be high growth industries. Because if you can find those really good industries, they're going to reward you because they're growing. They're going to say, all right, cool. I'm going to take your money, Tomas, and I'm going to increase it by 73% in a year. You're going to be like, perfect. That's what I want.
Thank you.